Rackspace RXT, $691 million in revenue for Q1, down 9% year over year on US rate Tango.
Equities rose as higher than estimated jobs claims reinforced bets on US policy easing, with the market extending gains after a $25 billion sale of 30-year bonds, which saw mixed demand. The S&P 500 traded less than 1% away from
All right, are we live here? I think we're live. Okay.
The Treasury 10-year yield declined 4 basis points to around 4.46%.
Did I tweet out the right link now? Let me.
So again, initial jobs claims rose last week to the highest level since August, topping estimates. US policymakers are keeping a close eye on labour demand and wage growth.
Yeah.
As they debate when it might be appropriate.
Okay. Yeah. I just wanted to make sure I tweeted out the right link. Thank you, James. How's everybody doing? All right, a bit under the weather, so won't be able to hang around as long as I usually do and bullshit with you guys. But maybe you never know. Got a little, I don't know if it's allergies or what, but my head is like, I can't even hold it up. What's up, Max? FOMO. I have FOMO. All right, let's get right into it. Let me mute. Did I mute this? Or... All right, so we got some interesting stuff. Really quiet week this week, which is a good thing. Not really much of any critical economic data. No Fed. No inflationary fears, right? As far as that's all coming next week. So be prepared. But earnings, we got some, through some of the big earnings, the ones we need to worry about have a effect on everything else. So we came into a quiet week, and as far as backdrop is concerned, we did see some improvement, right? So let's go through a couple of big picture stuff, and then we'll talk a little bit about what we've been seeing in the flow and everything else. Okay, so here, this already rolled over, right? Credit market signals pretty much rolled over ever since that retaliation from Israel to Iran. If you guys remember that, how quickly that's gone, right? And again, maybe you thought that was the end of a potential, the risk of some holy world war or whatever, any further escalation out of there. Maybe you didn't, but the credit markets were telling us that they were no longer concerned, right? So that helps. Again, doesn't mean you can go throw a dart and buy anything out there, but what it means is, in all likelihood, anything that's in play off weakness, right? So in other words, why I say in play, because we've been in a market where not every day or every week the same stuff is moving up and down, right? We've seen a very rotational type of market. But when you get rid of that, the cautionary signals out of the credit markets, what it tells us is that we can look for opportunities on the long side. We should look for opportunities on the long side, especially of any weakness, okay? As opposed to if these credit markets were continuing to signal caution, or even worse, right? The credit spreads were widening out. That's a signal to sit on your hands and do absolutely nothing, because in all likelihood, whether you think you're going to be affected or not, that risk kind of swallows up the whole market, okay? Again, whether it makes sense or not is irrelevant. So we kind of saw that these things eased well ahead of even coming into this week. We saw it off the Israeli retaliation. Okay. Then we had a couple other things we wanted to see, right? We had Sharpies, which for I don't know how many weeks, but into the highs of the market really started to add hedges on, right? They unwound their long exposure and they started to put hedges on, right? They're net hedged. And the reason why they were likely doing that, hedge funds, which have been short equity index futures, were covering the short and end up getting long, right? Into the initial selling off the highs. And we saw a little bit of easing here on this front. Again, we'll get an update tomorrow and we'll see what that looks like. But as you can see here, Sharpies in the red and hedge funds in the green, you see a little curl there, right? So hedge funds are no longer even net long of futures, they are flat. And Sharpies are still hedged, but less hedged, right? So again, the takeaway there was, the last thing you want to see, especially if you're bullish, okay, is that Sharpie crowd continuing to add hedges on aggressively, right? We were kind of talking about this here in late 2021. Okay. So that could eventually still happen, right? Down the line here. But last week we saw a little bit of easing off that threat. Okay. If you remember, the systematic fund crowd was a big part of the supply, right? That were selling into the weakness. Again, we kind of got rescued there where off that Israeli retaliation, a lot of the things that were causing issues found some relief. Okay. And with that relief, that systematic crowd that was on all out sell mode after we broke through that first threshold kind of was stuck in a little bit of limbo, right? No more selling. They really weren't doing any more buying. But that supply that was hitting the equity market was no longer there, right? So again, a little more relief. And as markets have bounced, as you could see from this Goldman piece here, they've become net buyers again. Okay. Again, it can change, but coming into the last couple of weeks, along with some of the other stuff, we started to see, again, the best word for it is some relief on some of the stuff that was causing issues. Okay. Another big piece, right, was a big pillar throughout the whole rally off last year's October lows was gamma. Again, I don't want to get into the whole gamma shit with you guys, right? Make all our head spins, but that was a big proponent of that buy the dip that was going on in markets. Okay. When markets started to roll over, we went into negative gamma, which is the total opposite of that buy the dip mechanism we see. Okay. Um, Coming into this week, we saw the largest 3-day increase in long gamma on record, right? Back up into this vicinity. And you've been seeing it in the price action, right? Kind of quiet. Market looks like it's going to start to sell. And then all of a sudden, buyers show up and prop it up. Okay. It also has an effect on the upside, right? But when you lean bullish, you kind of get this lull like we saw today, right? Very low volume. Market gets excited off the open, maybe a little gap up, and then you get kind of nothing for a good portion of the day, right? You're not seeing much momentum in either direction. And then as we get to the close, that buy the dip comes into the market and catches a bid again, right? So that's all, a lot of it's tied to this, okay? Now, this has been in place all week. It will be in place as we go into next week, but next week, if I'm not mistaken, is expiration, monthly expiration, and that's when you see this gamma get chipped away, and we'll see where we stand at the close of next week. All right. And again, you got a lot of other catalysts next week, which we didn't have this week, which was a plus. Okay. But this is pretty evident in the price action you're seeing, right? Driving bears crazy. This is hedge funds and individual names. And again, this is not, we've been seeing this pattern over and over and over again, right? They get short, they end up covering their shorts, they get lured into get it putting on some long exposure, and it doesn't take much before they start shorting again. Okay. And that's exactly what's been going on here, right? They are net short. This is just individual names now, right? We looked at futures earlier. So they're flat futures and they're net short as a whole in individual names. Okay. And what's really interesting is what we've been seeing in names. Okay. And that's, I think, been the most frustrating part for me, as you guys know, because of earnings season. The lack of the edge out of the flow for me is it kind of puts the handcuffs on me, right? Because that's my idea generator basically. That's what tells me where the hot money is, where the rotation is, where the real short squeeze is happening. So if you guys remember, after last week, as we get through quote the heart of earnings season, we start to get some clarity in the sweeper activity. We start to get a better read on where that hot money is flowing. And little by little, we've been seeing exactly that. Okay. It started with, just selective spec names in like a GameStop, then utilities, then banks again, right? So we're starting to get that clarity from the sweeper activity as well, which has been a huge help for me. And the God's honest truth, I've had a decent week this week, just off a few names, and it's been solely because of the sweeper activity, right? Without that, as opposed to the past 2 weeks, the 2 weeks prior to that, I wasn't doing jack shit. Excuse my French, right? The only thing I was playing was GameStop. So again, that's another plus, right? Being that we were going into earnings season the last couple of weeks, the start of earnings season where all the big names report and everything's an earnings play. Now we're slowly getting out of earnings season and we'll be able to get a read on sweeper activity. Now, that doesn't mean it has to be a bullish thing. Okay, that it's been bearish before, but you're still going to have that read, right? If we're seeing a lack of buying and we're seeing aggressive put buying, right? That's a bearish take. Okay. If we're seeing a lack of activity just in general, again, that's a cautious take, right? The flow is telling us to not do much. But what we usually see, especially in the type of market we've been in, is we see at least some signs of rotation, right? They're focusing on certain groups. Certain groups have the momentum. And you see it out there, right? Examples, the names that everybody looks at, right? NVIDIA, SMCI. I mean, the sweeper activity there has been dead. You see one call sweeper, 10 minutes later, you see a put sweeper. And then 10 minutes later, you see a call sweeper, right? You don't see that aggressive repetition of buying that we like to see, okay? Those names, they're kind of stuck, right? Where, again, whether you like it or not, names like a GameStop or names like utilities or names like the one that I did really well on today, that SPAC, what is it, ALCC. They're seeing the hot money right now. And that's why the price action has looked a lot better. Banks, right? Even banks. So, again, it's just to sum it all up, I think we've seen some nice relief coming off the initial pull. And now we're starting to get some clarity out of the flow that's going to give us an idea of how things may shake out, right? Where the hot money may be for the foreseeable future. What else we got here? Do I have anything else here? Oh, I didn't post the thing here. Hold on. I got to go through the action again after the close here when I get done with the webinar. But here's some of the top activity on the day. This, by far, in my opinion, was the most aggressive activity per name, ALCC. We've seen a little bit of action before. I give props to Steven in the room. I think it was Steven, who initially told me about this name, being that it was a hot SPAC commodity type spec. I don't know, something to that effect. That had a lot of hype to it, basically. And, you know, at that time, it was ripping here. And you guys know I'm not, this is not my cup of tea, chasing into all that excitement where everybody first starts to know about it. Then we were waiting on this nice washout here and go dead. And that's exactly what happened, right? So then we started to see a little bit of nibbling in some sweeps. And then today, the action stood out like a sore thumb. They hit the name numerous times. Eventually, there was some put selling to come in, and for day trading purposes, if you're day trading, especially equity, this is exactly what you want to see. This is exactly what you want to see. Stock held up decent all day today. They pretty much supported every bid, and every time a round of new action came in, boop, you got a nice pop out of it. Net. Look at the move on the day. Pretty healthy move. You're talking about a $3 move on a $15 stock, right? Which realistically you could have. I mean, if I held for the majority of that move, any of you could have held. Me, I get shit. As soon as I move a stop, I get clipped. But this was a pretty good one today. What else? Just to again give you guys an idea of some of the names they've been buying. This is a name we've seen some buying in this week. AVAV. Some of you guys know this name. It's a drone play, I think. A profitable name. All right. Technically, stock looks healthy as an ox. And we've seen some buying come in this week. Another buyer here today, July 250s in an opening sweep. And, for a name that doesn't catch much action, looks really interesting. All right, now, if you haven't played it already, you probably want to wait for a little bit of a breather. As you can see, it got a little too hot here. But a really interesting name. What else we got on here? DraftKings caught some action today, some deep in the money August buying. It was more of a stock picker's market up until, I would say, the late afternoon. DraftKings, what they play here? Let's see. August, deep in the money calls. All right. So again, if we're looking at a DraftKings for an entry, you got a little bit of a breather off earnings. Prior to earnings, you got earnings out of the way, and now you got some nice looking sweeps there. Right? Not spec action. Somebody looking to make a bet on the name, deep in the money, utilizing a little leverage out of the option market, and some good looking action. All right, Costco has been in beast mode. Caught another bet here today. Look at this thing. Jesus Christ. So that dipped didn't last long. Costco ready to bust highs again. You got a September sweep here for $500,000. There was another sweep later in the day. I wasn't sure how clean it was, but this was the cleanest on the day this morning. This is another hot name, Coop. New highs, been running for a while. This is the main problem with, and again, you guys have heard me complain about this for God knows how long, but the main issue has been a lack of new names. Okay. And, for those of you who just like to trade on the more tactical side, that shouldn't bother you much. Right. But for those of you who are looking to give a longer leash to stuff, right, and to catch that smoother ride, we talk about it all the time. This type of trip where there's no sellers, nobody's in the damn thing, that comes off initial activity, new reaction. And it hasn't been the type of market for it. It hasn't been the type of economy for it. It hasn't been the type of anything for it. That's why we've been seeing a lack of new ideas. All right, talking about the same names over and over. APP looks great. VRT looks great. CCJ looks great. It's the same names over and over and over again. There will be a point at some time where we start to see initial activity in new names again, and that will be a fun time. But right now, this has been the biggest issue is that a lot of these names they've hatched, right? A lot of these names they've hatched. Like, look at this utility trade, right? Now, utilities, I don't even understand what's going on. Positioning in utilities as a whole is at bearish extreme. You guys have seen me post that chart in recent weeks. Okay, meaning nobody owns utilities because of rates, right? Yields go higher, nobody wants to own utilities. But what's going on behind the scenes, and it's been going on for a while, that's not the sexy story out of utilities. Utilities are usually a defensive trade, right? What people are or institutions are making a play on now is that power trade, right? That energy trade. Okay. They use all this data storage and what do they call again? These you guys know what I'm talking about with AI, the data, whatever. But all this new technology, AI, all needs to be powered. Utilities will benefit from that, right? So you're seeing names like this, like a VST, where when it caught that initial activity, and I'm the first to admit it, I kind of brushed it aside because I'm not interested in utilities. There's a bigger trade going on here. Data centers. That's what I was looking for. Yeah. Thank you, Stephen. Data centers. You got to excuse me post 4 o'clock. My mind drew blanks, But that trade has been going on. This is not brand new. You see it in a lot of these names. So this thing keeps going. Look at this thing, VST. It's ridiculous. So we started to see action in this guy a couple weeks ago, NEE. Obviously, if you're in the steam room, you know about it. Even on Twitter, I've been posting about it, and you see it catching fire here. A lot of the utility names have been bid, and now they're starting to get recognition, and they're extremely underowned. Okay, they're extremely underowned. So that's been another group, right? Again, not the group you're looking for, right? In a bull market, right? That's not what we're usually looking for. We're looking for growth names, okay? But this is the market we're in. This is the market we've been in. Okay. Another thing benefiting off this data center trade and just in general are the metals and miners, right? Initially, we started to see it with a Freeport, which still looks good. FCX based off the copper trade, but these miners, right? Look at the miners. They had a little dip and consolidated. And let's see if they get out here, right? A couple of them had nice pops over here the last couple of days. Okay. So not to beat a dead horse, you may not be interested in this group, right? But that's where the hot money is currently. That's where it's been going. We saw a nice stretch where it went into mega cap tech, and every tech name that everybody stares at all day long. It's been a lot quieter there. Today we saw a little bit of action. There was one big bet I put on. Did I put it on here? Oh yeah, here Apple. We've seen a little bit of action in Apple, but again, what's one sweep in Apple? It means nothing. It means nothing. So I'm trying to think what other group. Oh, and the banks. All right, here's your Trump trade. Goldman kind of was stuck there for a bit. Bye bye. All right, Wells Fargo was the first to go. Was in a little breather mode here for a bit. Citi looks like it's getting ready again. So the banks look good, and what's interesting is we're seeing a lot of that shorter term, more speculative momentum type action. We're seeing it in the banks now. We're not really seeing it in the Teslas of the world or the Nvidias of the world and stuff like that. The only name that's still seeing some healthy looking action out of the big guys is Amazon. That's the only one. But again, this is not new. This is not new. These are crowded trades, and not that they need to fall out of bed, okay? But they're just going to be tougher to trade. They're going to be tougher to trade. And I think the biggest part of trying to force trades out of these things, again, I'm talking about swing trades, is missing out on something else. Right now, again, you're not missing out on some of the sexiest stuff out there, but that's the problem that people run into by staring at the same names, over and over and over again. Like, look how long they've been staring at SMCI. Oh, it's going to wake up today. No, it's going to wake up today. No, it's going to wake up today. Right? And in options, that's just as good as crashing what it's doing right now, because you're going to lose the money anyway. The premium disappears. So that's what we've been seeing. Okay, we're still waiting on that underbelly explosion per se, but it doesn't look like it's coming. And the reason is the economy is not suited for it. So if you're not getting that growth, if you're not getting that type of growth economically, and you don't have the Fed injecting liquidity into the system, you're not going to get that sweeper explosion in the underbelly of the market. You're going to see it hide out in some of the more safer defensive names, and at times you're going to see rotation, and that's kind of what we've been seeing here, right? So, and you think about it, right? And this is what's so difficult. Try to handicap the indexes, especially on the short side. Okay, is this risk on bullish? Probably not, but there's a good chance the indexes could still go higher while this goes on, right? If some of the crowded mega cap names just chop around and hang in there, and financials, utilities, energy see rotation from time to time, you're likely going to see the indexes grind higher. That's the difficult part with trying to short this type of or any market. People just look at the indexes or look at one name, right? One group. Oh, the semis are weak. The market should take a shit. No, I mean, what are the other groups doing? Like you had some of these semi AI names. I mean, it was a bit mixed, right? Coming out of it sentiment wise in these groups. And the market still found a way to continue higher here. A lot higher than many of us thought without the participation of those names. All right. So next week we have a pretty busy week. A lot of things going on. And when you have those catalysts going on, they could move things around. They could change the playbook. And we shall see. We shall see. But ultimately, even if it leads to selling, as long as we're not getting any negative signs out of the credit markets that liquidity significantly tightening, right? Or there's a potential credit event, that sort of thing. You need to try to lean bullish and look for opportunities off pullbacks. There will be a time where something happens, that's the inevitable, and those credit market signals will be screaming caution. All right? That's the exact time where you do not want to do what I'm recommending right now. But I still recommend, even with the indexes looking better here, I still recommend looking towards names and subsectors and pockets of the market for alpha than the overall market, because it could get, the upside could become more difficult depending on what some of the heavily weighted stuff, how they perform. Right? If they perform better, then you're going to get more upside in the indexes as a whole. All right? But there are some interesting groups out there, from again metals to energy to a lot of that stuff. That's got some decent momentum. Financials, we'll see if it starts to that the excitement in the financials start to drip down into that underbelly. It's been mostly the uh, big banks, the leaders, right? I mean, initially, it was just J.P. Morgan, right? Then Goldman got loose. Then Morgan Stanley, which caught some action this week. Look at that. And for day trading purposes, or extremely on short-term tactical purposes, you may not want to pick one of these banks. You can trade the ETFs. Like I'll trade an FAS from time to time if they're hitting the banks, that sort of thing. But I think it's important to know where the momentum is at, especially for those of you trading options, because otherwise it could get extremely difficult. Extremely difficult. Is there anything else that I wanted to share with you guys before I ask you if anything's on your mind? Hold on. I'm trying to think. Any other names throughout the week that caught some action? Well, again, the GameStop, you guys know. I know a lot of you guys on Twitter have been asking me about it. Again, I'm not a game, like people just misconstrue me talking about GameStop like an ape and I believe in the company. If I see that type of aggressive sweep and buying in anything, I will be playing anything. Maybe I won't, maybe not anything, but almost everything. Like right here, they really, really came after it. And it's still catching action up here. But would I buy it up here now? Absolutely not. Absolutely not. I would be looking, if put it this way, if this is going to continue, you're going to see some of these other names get picked off, right? We're starting to see some of that. If we see this, I don't know. I don't even know if it's a spec trade because they really haven't been coming for all these names. But if we start to see some of these heavily shorted names really start to squeeze, there's going to be other ones behind it that will catch action, and you'll likely find better risk reward entries on. But this is an 80% move already in a week, a little more than a week. So that's the story. Anybody have any questions? What's up, LT? 99. You're still on the BLTR? Yeah. I mean, look, it doesn't look bad. It's just this is kind of the problem, LT, this PLTR that we were having the discussion about. I think it's going to be root canal, pulling teeth to try to sit in this thing and make that big money longer term. Is it possible? Sure it is. You can't get wrapped up into every tick. If you really believe in the name, you got to try to buy it off pullbacks, as take advantage of that, and just tuck it away type thing if you truly believe in it. But to try to catch that smooth trip like we see in some of the few names that catch action and go like this, you're not going to get that in the PLTR or any of the hockey sticks. Here's a perfect example. All right, this is the epitome of what I'm talking about with this hockey stick pattern. Okay, they can look great. They can look great for a 2-week span where they have momentum and they look like they're back on track, and then whoop, right back into the hockey stick, right? Square. I mean, it's so frustrating. In that hockey stick pattern, that's why I remember it throughout my career. It's one of the most difficult type of setups to trade. It's easier said than done, put it that way. You got to try to buy pullbacks, and you have to sell the rips. And there are going to be times where you sell the rip and you feel like shit because you got out too early and it keeps going. and you think it changed, but then you'll feel better about it in a couple of weeks when the stock gets hit over the head for whatever reason. You know? Or the other problem is people look at the exception to the hockey stick pattern. One of the hockey sticks that got on track and ended up becoming something. It happens. But you eventually, when you're in this game long enough, you look at everything through odds and probability. Everything. That's the only thing you can do in this game is look at the game that way. And trying to catch a clean move out of these hockey stick, once upon a time crowded stocks, the probability is against you, plain and simple. Is there a possibility? Sure, but the probability is against you. Yeah, like a Carvana or even an Uber kind of got back on track in a sense. But think about Max, right? How many hockey stick names we could talk about that, right? PayPal, all the weed stocks, all the EV stocks. You can go on, all the Kathy stocks. You can go on forever. So you can name 2-3 names that got back on track and did well, and then I can give you 300 names that you would have pulled every single hair out of your head. That's the problem. So you're asking a lot if you're trying to pick the 3 out of 300 that's going to do it. And you got to be honest with yourself, right? If you like the name, you're always going to think, oh, this is going to be the one. This is going to be the exception. But that's what everybody thinks, right? I mean, I had people swear were guaranteed that Square and PayPal were going to be fine and get back on track. And at the time, I mean, it was even hard for me to believe that a Square and a PayPal could be this dead. But you never know. You never know. That's the beauty of, buying the new setups, initial activity. It's unbelievable. Again, plain and simple, there's no sellers. Nobody owns it. There are no sellers. Right? So the same thing, looking at it through a probability perspective, yeah, there could be one that catches flow and fails. But the majority of them that catch flow and they're profitable and growing profits and doing their thing, this is the smooth ride you get. The smooth ride. I think a couple of you like this name, right? The Cava Baby Chipotle. And yeah, like I said, the flow, it's been far and few. VRT, APP, that had a good quarter. There hasn't been a lot of them. That's for sure. RNG, that's a hockey stick. What's that been up to? I haven't heard about that name in ages. Is that coming to life? Oh, man, that doesn't look like it's coming to life. But there you go, Vlad, right? That's exactly it. My God. That's a lot of agony right there. Look at that. So see, if you really scroll in here, you can see trades, but it's always easier said than done, right? The chart doesn't do it justice. Like you could see, all right, if I try to wait for pullbacks, I have a good shot of making money trading this thing. But it's still agony. It's still agony. So, but I know quite a few of you who have been, names that obviously haven't even caught flow. Some of the newer names that have looked great, and they've been doing their thing. Just there hasn't been a lot catching sweeper activity. That's kind of been the issue here, right? And so what's catching sweeper activity? You see, right? The names, gold miners, right, or Freeport. It almost looks like, okay, they go to the energy stocks, they go to the commodity names, right? Then they overheat and get crowded. They go into digestion. Then they go into the semis and tech. That's always the longest they go in for. then they go into some chop and digestion, right? So it's not newer names that are being discovered. They're existing names, some of them, the majority of them blue chip names, but they just continue to rotate the money. They continue to rotate the money. And in my opinion, for trading purposes, it's not an awful thing, right? But for position holding purposes, that's where it gets annoying, because that rotation, it's almost like you need to try to avoid getting stuck when they go into that lengthy consolidation. And that's a difficult thing to do. That's a difficult thing to do. Gold showing some life again today. Again, we'll see. Bitcoin kind of has been sleeping here this whole time. Still not really showing much. I know it's up today. And the reason I bring up Bitcoin, as many of you know, we kind of like to look at it to get a gauge on liquidity, right? Because that's Bitcoin's fuel. I think the takeaway right now, again, up to this point here, maybe it breaks out tomorrow, but up to this point here is that liquidity is kind of a non-factor here, right? So think of this, right? Going into the little pullback we've had, a lot of people who follow liquidity really thought that it would be a problem. And if liquidity is a problem, more likely than not, you're going to see risk assets, equities look heavy. Okay. And the reason, for a number of reasons, you had the tax day, which is always a problem, right? We got through that. Then you had bond supply, a heavy amount of bond supply coming to the market. That's still in process, but there's been solid demand for these bond auctions. So it's kind of been a non-factor up to this point here. And so what's that translate into as far as equities are concerned? What that translates into is a lot. You can't just throw a dart and make money at anything, right? More than likely, the stuff that is going to continue to perform well is the more profitable companies that are growing, right? Those are the things that should find some lasting power in an environment where liquidity is not much of a factor. So maybe it's the banks, like we've been talking about. Maybe it's the banks. They sure look like they're the group right now. Yeah. See, here's the thing. What's it? I was calling you Vlad. The thing, Vlad, is this: the speculative names like a GameStop and some of the names you're mentioning. Again, we talk about that hockey stick pattern, right? When those names, even when they're seeing aggressive buying, sweeper buying, like I mentioned earlier, I want to play them, okay? Because the logic is, what that aggressive sweeper buying is telling me is there's a buyer with an appetite there, okay? For whatever reason, I don't even need to know the reason, okay? I want to get in the middle of that, okay? So when I'm playing a GameStop, whether I'm holding it overnight or just trading it intraday, that is my sole purpose off the sweeper activity, is I want to benefit off that aggressive buying that's coming in. I don't need that buyer to ultimately be right. You understand? He can be completely wrong when it's all said and done. All I'm looking to do is take advantage of the momentum that buyer is going to create. So I'm not looking at the company per se, right? As opposed to what I would do if I was swinging a position, right? GameStop wouldn't be a name that I would build a position here in at this point, right? It would be more of the names some of you guys mentioned, like a Shark Ninja or a VRT or that sort of thing, Because the flow in those particular names, when they catch it, I'm making a bet that that player, that buyer, whoever it is going to be right on that name, on the thesis behind that name. Where the more speculative names, right, the momentum type names, I'm just looking to trade. So to that point, like we saw RKT, you mentioned, we've been seeing some front month activity, May activity. We've seen an uptick in. If we saw some buying with decent time behind it, you can make the argument that, okay, somebody believes that the worst is over, maybe for the mortgage industry as a whole, and is building a position in the name. But we haven't really seen that type of action. What we've seen is a lot of short dated activity. So again, it may be just a momentum play is what I'm getting at. So I don't know if you're looking at these particular names because you mentioned this too, right? The lending tree. I don't know if you're looking at these particular names as a bet on the financials because the group has been doing well or not. But the problem with this is this, right? This is the problem with it. Okay. And I got to keep going back here. Okay. You see this? And it's been working it off. All these buyers, they had a lot of time there. Those buyers were excited, and it got to the point where they were excited where they never wanted to sell, just like we're seeing now in a lot of tech stuff. Okay? And when this happens, they don't sell and they hold the bag. And every little pop finds sellers. So even when you go through this lengthy process, and this is a lengthy process at this point, okay? It's bottomed basically, right? It hit the ground and lay dead on the ground. But even now, you see, you get these pops and you see selling. And that's the problem, like with a shop or a square, right? You run into some negative news and then you go, oh boy, here we go again. And you're gapping down here again. That's the problem. So, from a risk reward view, what are you looking for here, right? If you're hanging around in the name, you really got to believe in this name longer term, like really believe in it, that it could get through all this and prosper. It's possible. It takes a lot of time. We've seen it. I mean, AMD went through a period like this, Vad. AMD, I remember it was catching leap buying $2 calls, leaps. The stock was like $1.90. Nobody wanted to touch AMD. And now, AMD is a hot stock. So it's possible, but it takes a lot of time and a lot of aggravation. A lot of time and a lot of aggravation. And, you're seeing it with all these names. Like, look, Snow, right? A lot of these names were bought off a sexy story when the Fed was printing money like mad. You didn't need fundamentals. The story got everybody excited. So they gunned these things higher. They brought them public already at expensive levels. They gunned them higher. They got everybody in. And now, even with the AI hype, Snow can't get out of its own way. Here, right? Oh, here we go. It's back. And then boom. One negative piece of news and it's done. So these are just tough, man. Tough. They're tough. So if you're looking like towards an RKT or a tree, like if you like that group, what you would hope to find is a newer name that didn't have to go through all this. Right? And those names are usually they become the leaders, right? Sometimes they come about from IPOs. You see a lot of times, right? But it's the ones who survive usually are the biggest and the best companies that can weather the storm. You know, the smaller names need to rely on credit, and look what we went through. Still, that's why the small caps can't get out of their own way, right? Those smaller companies, this is just not the environment for them. You know, it's been the environment for big. The bigger, the better. Rates go down. Well, that's that in general. I think for small caps in general, of that I think is what's going on here, right? We had the market was pricing in like 6, 7 cuts, and you had the Russell off the October lows catch a nice rip, right? And then recently, all those cuts got priced out, right? So then the Russell stopped in its tracks, corrected a bit, and now finding some footing in between ground because again, the Fed looks like it wants to cut no matter what. It's just looking for any excuse. Now you have the job market showing a little bit of some signs, so maybe they find an excuse to cut. But yeah, they benefit off cuts. But who's going to predict that, man? You can predict that. I can't predict that. You're going to predict where rates go from here? I have no effing clue. And everybody who tried to predict it already is wrong. No idea. Inflation remains sticky. The Fed's cutting. Deflation. No stagflation. No recession. Or guarantee a recession. No, forget about the recession. Nobody has a fucking clue. You can't handicap that macro stuff. Don't even try. And that's no shot at you. That's every one of us. It's an impossible feat. You know, you can take advantage of the short-term momentum behind that, right? So rate cuts are in vogue right now. Market thinking we get rate cuts, and the momentum is behind names that would benefit off rate cuts. But once that changes, right? Once that thing changes, you can't. If you're going to be stubborn, I mean, you're going to get nicked up. Just look at what we just went through. Some of the smartest minds on the street guaranteed a recession, not this year, last year. Guaranteed a recession, right? So if you were positioned for a recession, and when that obviously never played out, and you were stubborn enough to stick with that arrogance would have buried you. So you can place that bet, but the point of the story is, if it's not looking that way, you got to get the hell out of the way. But I'm being dead straight with you. Me, I can't. I'm not even going to try to predict that stuff. Like me too. I thought we'd have a recession. I didn't see how it was possible we wouldn't have a recession. With central banks, the most aggressive tightening cycle we ever seen. I didn't think it was possible for us not to have a recession. But that doesn't mean because I didn't think it was possible, I wouldn't adjust to that market that's telling me something completely different. Because I've seen people get buried that way. You know, this is a tough game. There are tough trades all over the place. A lot of the retail, the newer traders, not even new, traders in general, they're drawn to the tough trades. They want to be able to say, I'm the one who nailed the top, right? I'm the one that caught NVIDIA before it broke out. I'm the one, you know what I mean? But that's the tough part of this market, those tough trades. There's easier trades out there if you're disciplined enough to wait around for them. And a lot of the times, those trades are not the trades that everybody's talking about. and everybody wants to be in. No matter what it is. You see it all the time. Look, utilities now. You think anybody is out? Is anybody bragging about the trade in utilities? Nobody wants to be in that trade. Meanwhile, you got people holding on to utilities by accident that are making more money than people holding on to tech right now. So, but there are a lot of tough trades in this market. Yeah, I'd wait, Jay. I'd wait for pullbacks on a lot of the stuff that got hot this week. I definitely would, and you'll get it. You'll get it. Trust me, you'll get them. They may not come when you want, but you'll get them. Like even the banks, you looked at, like you see. I mean, it wasn't much, but you get an idea of how much selling there is. These have been, what's weird about the banks is that they haven't been moving all in sync. That's a straight, I've never seen that before. Like usually when JP Morgan goes, Morgan Stanley's right next to it, Goldman's right there. Yeah, one of them's up better than the other, but they're all moving. I've never seen, you had JP Morgan ripping, right? And Goldman Sachs was stuck in consolidation, couldn't get out of its own way. So you'll get breathers. Here now. I don't know which one were you talking about? MS, right? Let me see MS. I mean, MS is not as extended as some of the others. But look here, see this? You should get something like this at the least, Jay. And what that likely will tell you is that there are no sellers. So I don't know if you're looking to put on an option trade or equity, But again, this is the tough part with names that already are moving. They've moved, and now there's not a lot of names to choose from, right? What you would want to see? I mean, did it go? Let me see some of these names here. See, like ideally, you would want to start looking into like this space. Some of the other banks that haven't moved, but this is a weird market. I don't know, maybe there's a reason that they haven't moved. I don't know. Maybe if we see some sweeper activity to confirm they're ready to go. Kind of like what we saw with the semis, right? Where you would want to try to buy dips on some of these cyclical semis as opposed to, the crowded hot names and chasing the highs there. But it's tough. Yeah, MS. I mean, if I was going to buy it here, I would leave a little room to add into a breather. But I don't think it's that absurd. I really don't. Like, I think it's just breaking out, Jay. Oh, what can I do? I think it's just breaking out. So I don't think it's a horrible chase. Just don't expect, right? It's totally possible for this to breathe a little bit here. Yeah, this is just breaking. It's, again, if you're looking for that bigger move, that larger move, you want to try to survive any little digestion, right? Same thing with GS. That's what we were talking about with GS. Like, look, why am I so thing here, right? What happened to my line? Why is it crooked? But you kind of had a complete break. I can't do it, but you guys see what I'm talking about, right? So here, look, kind of J, right? This is what I'm explaining here. See how GS, you had this run, kind of looks like Morgan Stanley here, Okay. And then you see like what it did here? Again, that's a bullish sign. There's no sellers, but if you're in options, you may not enjoy sitting through that, right? That's the point I'm trying to make, Jay. Longer term, if that's what you're looking at, it shouldn't matter, but that's the issue. But yeah, big picture wise, these things are breaking out. These are major breakouts here. Major breakouts. What was Wells Fargo was the other one. Like, look at this. All right? Same thing. See, big rip. You get a little bit of digestion there, Jay. Right? Another nice rip. See that digestion there? So that's kind of what I'm referring to. Maybe you want to put on a piece now, wait a little bit to add the other piece if you get digestion, that sort of thing. That's an option. But yeah, these are big breakouts here. These are big breakouts. I mean, Wells Fargo was a dead stock. Look at this, right? This thing was dead for a while here. Like I remember, what was that retail name? Oh, Dick's. Look, right? The line's still up there. Why is it laggy? God damn. But anyway, you had a big break here. A little bit of a breather and then pink. And even with the recent pullback, still up a good 50 points, 40 points, whatever it is. So yeah, that's the story. But that's the market in a nutshell, right, guys? This is not newer names, right? Like none of these names are new. They're not new leaders. These are quality, well-known names that have just been out of favor for a while and now coming back into play. That's what's been going on. The good thing about these names outside of tech, especially, nobody owns them. No, you talk about under-owned, hedge funds, long-only funds. Nobody is in these things. Nobody owns these things. I'll give you another thing to bull you up, Jay. You know what was the most hated sector on the board coming into this year, 2024? The banks. Okay, hedge funds were most short the banks coming into this year. You know what was the most hated sector on the board coming into 2023? So last year, semis. And you know what the semis did. When the trend changes, the tide changes, and they're not in the water, and they all have to get in the water. It's a big move. It's a big move. So that's the story. All right, guys, I got to go take some Advil and go relax. Anybody have anything else to add, or did I forget anything we usually look at? I covered it all, right? Some of the big picture stuff. All right, so next week this was a quiet week, so don't relax too much. Next week, you got the CPI, you got Powell speaking next week. I think that's on Tuesday. I don't know. You got a lot of things going on next week. And on a short term basis, we're a little heated here, So, but still, the indexes. I try not to get too wrapped up in the indexes, and I try to look for opportunities in names. Right? You may not find them in names that you like. That's okay. Try to stay patient, but try to look for decent setups in other names, because even with the market hot, you may see money move around. You You may see money move around to different places. Yeah, we get Sharpies tomorrow, and I think what we're going, I think we probably see them cover some of those hedges some more this week, um, based on what the hedge funds are doing. Because that's what I'm basing it on. Because look here, hedge funds in names got short again. You know what I mean? So if hedge funds shorted futures, that means Sharpies probably took off some more of those hedges. But we'll see. We'll find out tomorrow at the bell, and we'll take it from there. Oh, were you asking about Sharpies? Here's Sharpies. We looked at it earlier. So you got a little bit of a curl, a little bit of a unwind there. Not much. Hedge funds covered that little long exposure they had, and Sharpies took off a little bit of hedging. So a little bit of relief, just basically as a whole, all the big picture signals. DJT. What I mean, this thing, you long or short this thing? Are you talking about the stock? You long or short, Rockstar? Are you talking about the stock or what? This thing's crazy, this stock. I like to live vicariously through somebody else who owns it. I mean, this is nuts. This stock went from 30, well, forget about where it started from, but recently went from 30 to 80, then back down to 20. You're long? Nice. So now I root for it for you. I live vicariously through you. Very nice. Now I root it on. I got some rooting interest. Very nice. All right, everybody. Thanks for stopping by. Enjoy the rest of the week here. You got a day. Tomorrow's Friday already, and then the weekend. All right. Have a good night, and I'll see the majority of you mañana anyhow. I'm long June 60s. Nice. I'm rooting for you. Have a good night, Rockstar. Be good, everybody.